said, my name is Simone. I'm the Chief Operating Officer at a company called Elliptic. We are headquartered in London, but a big focus for the company this year is our expansion in Asia. So I've recently moved from London to Singapore, where I'm based now, but hope to be doing about one trip a month here to Japan, where I'll be spending time with our new country manager, Ken, to work with our existing customers here and hopefully build an even bigger business. So let me tell you a little bit about what we do at Elliptic, and then I'll give you a little bit of an overview of the crypto space. I always find meetups a little bit tough to pitch at the right level because you've usually got people that know very little and then folks that know a lot. So bear with me if you're familiar with a lot of what I'm going to talk about. Hopefully you'll learn something from the talk today. And we'll have plenty of time at the end for questions as well. All right, so as I said, you know who I am. I joined Elliptic about 3.5 years ago. Prior to joining Elliptic, I worked in a financial crime consulting business in New York, and then before that, I spent 10 years with Deutsche Bank in the investment banking. What do we do at Elliptic then? I'm sure a lot of you are not familiar with who we are. So the headline for us is that our mission is to help protect businesses from financial crime in crypto. Our vision, our long-term vision, is one in which an open financial system really thrives. But we believe that for that to happen, we need players like Elliptic to help identify and stop financial crime from throttling the potential growth of crypto. So that's the part that we play in the crypto ecosystem. We have among our customers, I can see some names there, Fidelity, Coinbase, Square. There's some of the more institutional players that we work with, and we then also work with a host of exchanges, brokers, payment processors in all regions of the world. We've been in operation since 2013, which is pretty early in crypto terms. Our founders, 3 co-founders, set up the company in 2013, really driven by this belief in Bitcoin at the time to drive this idea of an open financial system. So here's a quick picture of us. This is Elliptic at our company offsite last year in Barcelona. I chose one of the outtakes where we're all completely mal-coordinated. But you know, this is a team that I'm really proud of, that I'm happy today to tell you a little bit about the work of this group of people. So, as the Chief Operating Officer, you should not ask me anything too technical today. I don't get really involved too much in the product and technology side of things. We have 3 co-founders with 10 PhDs between them that cover that side of things. I look after all the business operations, as well as sales and marketing and our customer success teams, which is largely why I'm here today in Tokyo, meeting all of our customers and hopefully some new customers as well. And probably the 2 things that I spend most of my time on are culture and customers. And those two things that I'm really passionate about. Happy to answer any questions about that, particularly in terms of the scaling that we did in the business last year. We grew from 25 people to 85, and went from 1 location to 4 locations. I interview everyone that joins the company, which we looked at the statistics last week, means that I interviewed 200 people last year in order to get to where we are today. So this is just a really quick slide because I wanted to put up here because I actually think these visualizations are beautiful. Ken, maybe we should get these printed and put on the walls in the Tokyo office. But they, for me, just highlight what we can do in terms of tracing transactions and visualizing blockchain activity. So on this side over here, you've got a visualization of the most active Ripple accounts and transactions between them. So this is showing where we're actually mapping out the way those transactions connect together. And then on this side, we have a visualization of illegal entities operating in the dark web. So I just thought that was a kind of a fun way of looking at it. Okay, so I'm going to do a whistle-stop tour of the crypto landscape. I'm sure a lot of you are really familiar with it already, so let's go. So probably pretty obvious to all of you by now, but it is more than just Bitcoin. But when I got started in the industry, it really wasn't all about Bitcoin. That was really synonymous with crypto. That's what everyone talked about. That's what everyone was investing in. The landscape is pretty different today. And we've got a plethora, some would say too many, assets out there to choose from. But from my perspective, it is really interesting to dig into these different assets, understand the different applications. They've all got something, different characteristics that can be applied for different purposes. Ethereum, for example, is there for smart contracts, and Ripple is used for remittance. And there are a lot of other use cases out there to explore. So if you're not familiar with these, I'd really encourage you to learn a little bit about the different types of assets that exist. And this is actually just a selection of the assets that Elliptic supports in its platform today. Alright, so I wanted to put this chart up there just to kind of put Bitcoin and crypto in context. And this is essentially showing us where Bitcoin and Ethereum sit in terms of the amount of currency in circulation. So this is almost definitely already out of date because Bitcoin is very volatile, so it moves up and down this chart pretty much every day. But the point is not really, is it 4th, is it 7th, is it 10th? The point is the fact that it's even on the chart at all. And that Bitcoin and Ethereum as well have come a really long way. I think one of the really interesting things that we're going to have to wait and see this year is what other crypto assets are going to be on this chart at the end of 2020. It's probably too early for a central bank digital currency to get on there by the end of 2020, but based on all of the interest and discussion going on right now, how many central bank digital currencies might be on here? Will we see something like a Facebook-sponsored coin or some other corporate-sponsored asset featuring on one of these charts this time next year? So this is a little bit hard for you to read, so I just want to read out a couple of points from here, but just in terms of giving an indication of where crypto is going and the type of adoption we can expect to see, this study has got some really interesting findings in it that are worth touching on. So Edelman did a report in 2018 where they surveyed a large number of millennials about their attitudes towards finance and in particular crypto. And I think this is all a strong indication about why crypto has been successful and also where it's going next. And so, first of all, what the millennial survey said was that they really don't trust the traditional financial system. With 77% of them saying it's just a matter of time before we have another financial crisis, and that they don't trust traditional financial institutions with their data. And then when asked about their attitude towards new technologies, they said that 74% of them said they believe in blockchain as a solution to make the financial industry more secure. 25% of them were already holding crypto assets, and another 30% expected to hold crypto assets soon. So a nice snapshot really for thinking about where this generation is thinking about interacting and managing its financial assets. Okay, so why do we have this interest in crypto? We talked about some of the reasons just now, but fundamentally it's because it is and has the potential to be open and inclusive. So what does that actually mean? Well, first of all, there is no dependency on a central authority, or at least there doesn't have to be. which essentially means that anyone can download the software to mine Bitcoin, to create Bitcoin, the open source code, and start trading. It facilitates peer-to-peer transfers without a bank or a central banking authority disintermediating those transactions. And then another feature, which is really important here, is that crypto is digitally native. So it is essentially the currency of the internet, supporting seamless cross-border transfers. And it's really quick. So if I want to send cash internationally and you go through a bank, I think we all know how long that can sometimes take. Whereas if you want to do it peer-to-peer, if Ken and I want to transfer money from Singapore to Japan, we can do that really quickly through a crypto exchange, or even by transacting directly with each other's Bitcoin addresses. Transactions are also a lot cheaper than in the traditional financial system, and another key factor for why there is a lot of interest in and potential in crypto. And we're seeing the landscape evolve really quickly. So last year we saw, for example, Binance getting into lending products based off crypto holdings. Coinbase is issuing debit cards now against your crypto balances, and also more complex financial products like derivatives. So what's really interesting at the moment is seeing some of these crypto-first companies offering more traditional financial products, but we're also seeing it happen the other way, with more traditional financial businesses starting to integrate crypto products into their offerings as well, because they know they've got to start attracting the younger generation of financial literate users. But there is definitely a volatility problem in crypto. I think anyone that's looked at the Bitcoin price will know that is true, which makes it really difficult for crypto to become part of the day-to-day payment system. You are not going to use crypto to buy a cup of coffee or a pair of sneakers when you don't know what the price is going to be from day to day. But we saw a lot of developments in this space last year, and there are solutions being worked on and being invented in this space, and particularly around stablecoins. So some of you will be familiar with the first version of stablecoins, Tether, USDC, Gemini Dollar, just a few examples. Obviously Libra and Facebook have been in the news about what they're trying to launch. There's a question obviously about where that's going to go this year, but that's certainly the route they're trying to go down. And then only in the last month we've seen significant developments and verbal commitments from some of the major central banks in the world about seriously getting into looking at central bank digital currencies as well. So really hopeful that we'll start seeing some of the volatility that has sort of held Bitcoin back from being a day-to-day payment mechanism being addressed through some of these stablecoin mechanisms. So all that is to say that crypto is essentially inevitable. So it's time, if you're not already doing it, it's time to look into it. Okay, so that was a quick whistle-stop tour. The next thing I wanted to spend a few minutes on is debunking a few crypto myths. So this is something that all of us at Elliptic, and I'm sure those of you that work in the crypto industry also spend a lot of time doing. There's a lot of misconception out there, misinformation, and so a lot of what we see our roles at Elliptic being is to educate and share awareness. So hopefully I can do a little bit of that today. So 3 myths that we find ourselves talking about a lot. So first one, particularly that we talk about with more traditional tier 1 banks, is it's a Wild West, there's no regulation. Second one is that crypto is mainly used for illicit purposes. And the third is that crypto is a black box. You have no visibility of what's going on. So let's take those in turn. So first of all, lack of regulation. So actually, there's a lot of regulation now in crypto, and some would argue too much. So we saw the first inklings of regulation in 2015 when the Global Financial Regulating Setting Group, the FATF, issued some guidance in June 2015. Now, it was just guidance. It was very general. It was not issuing specific regulations. It was starting to get people thinking about what regulation could look like in crypto. So that was June 2015, and things have moved on a lot since then. So in June of last year, the FATF updated that guidance and actually made it much more specific. One important thing they did in the June guidance last year was to define what a crypto business was, and that was, they called that a virtual asset service provider, a VASP. They gave a very specific definition so that companies could know whether they would or would not be subject to future legislation and regulation. So that was a really important step so that businesses in crypto could start understanding, am I going to be regulated or not, and in what way? They broadened the scope significantly of their initial guidance, and it started to include things like know your customer, expectations, transaction monitoring, things that we've seen in the traditional financial space for a long time were starting to be transposed into the crypto economy. And so, just to put it on the map, in 2015, this is pretty much what crypto regulation looked like. The US was really the only country that had put anything on the books. So FinTech were the first to regulate, followed by the New York Department for Financial Services, which is why a lot of those first crypto businesses that probably we've all heard of, like Coinbase, Circle, Paxos, Itbit, and so on, started out in the US because they felt that it was easier to do business in a jurisdiction where it was clearer what the regulatory expectation would be. The other part of that being that banks were more comfortable at supporting crypto exchanges if they knew that they were operating in a regulated jurisdiction. So if we fast forward to last year, we had a lot more legislation come on board around the world. So really good progress. But then by June of this year, this is where we expect to be, because the FATF guidance has to be transposed into national law for countries that cooperate with the FATF. So that's the expectation by this year, and it's a big reason why Ken and I are so busy going around the world helping crypto businesses understand what their obligations are and how they can meet those obligations. So this is good news for the crypto industry, and we're pleased to see that governments are taking this seriously. But what we consider to be part of our job is educating those governments on how to successfully transpose the FATF guidance into law. We are seeing some countries take it really far, almost to the point where it's very difficult to actually successfully comply, and so we spend a lot of our time trying to influence that, educate, and bring some degree of harmonization across countries, so just to make it that's a bit smoother for crypto businesses to comply. All right, myth number 2, crypto is used for illicit activity. So when we see headlines like this, even my parents will send me a WhatsApp saying, like, what on earth is going on in crypto today? So it's widespread, it's the thing that people associate with crypto if they don't know much about crypto. And that's what we consider to be a big part of our role, is trying to put that in perspective. Make sure that that's not the first thing people think about when they think about crypto. So as with any emerging technology, of course criminals are going to jump on it and find ways to to use it to further their goals, but it's not the only thing that crypto is used for. And so we spend a lot of time conducting data analysis to really look at how much crypto is used for illicit activity. In our view, it certainly is not, and we estimate, based on our data analysis, that only 0.5% of all crypto transactions can be linked to illicit activity. And that is in contrast with the traditional financial system, where about between 2 and 5% of global GDP is actually related to money laundering. So there are lots of headlines. It's usually what the media wants to talk about, but when you put it in perspective, the amount of criminal use of crypto is actually tiny. But it's to be expected that the media doesn't really want to talk about a crypto exchange's compliance program. So this is what we get. So, moving on to myth 3, it's a black box. Actually, the amazing thing about blockchain-based currencies is that they are anything but a black box. They are, in contrast to the traditional financial system, highly traceable. They are in a high degree of privacy, but a high degree of traceability. And that actually makes them a lot better from a financial crime perspective. And there are some great quotes from the director of FinTech who said, if you're trying to launder funds, definitely don't use crypto. And that is because while the identities of who's transacting are encrypted, you don't know who's behind a transaction, you can follow the money through the blockchain. And those transactions are listed openly. So this screenshot is a block explorer where you can actually see in real time on a website we can all visit the transactions that are actually happening in Bitcoin at any time. And so what we do at Elliptic is use data collection and data science to bring a layer of identity to this set of transactions so that we can help our customers understand, am I receiving funds from a legitimate source or from an illicit source, and am I about to send funds to a legitimate source or an illicit source? So from that perspective, it's anything but a black box, and actually very good for tracing where funds are coming from. So with that said, let me show you a quick visualization of the blockchain. So this basically just looks like a mess of Bitcoin addresses. So each dot is one Bitcoin address or wallet. And that's the pseudonymous identifier that is essentially the proxy for your name in Bitcoin terms. So what we do at Elliptic is map all those transactions, and then that process there that you just had a quick visualization of is what we call clustering. So we use data science to figure out which of those individual dots are controlled by the same entity. So we simplify the picture into this, and then as a second layer of process, we will look to identify who controls each cluster of addresses. And the way that we do that, as I mentioned, is 2 steps. First of all, we have our data intelligence team. They probably have the most fun jobs at Elliptic, where they just spend a lot of time on the clear web, on the dark web, interacting with crypto entities, collecting information, trying to identify who is behind different types of crypto activity, both good activity and bad activity. And then we pass that information to our data science team, who will, using machine learning, make sense of that big network of crypto addresses to bring it into a more organized, structured picture like this one. So, all that's to say that there are tools to understand the blockchain. This is a snapshot from one of our products, and point here for me is that crypto is actually very mature in terms of being able to counter money laundering and counter terrorist financing. A lot more mature than a lot of people think. We've actually done very extensive studies in the most common financial crime typologies that exist in crypto, which just demonstrates how much visibility and understanding there is in the space, which makes us all better equipped to fight financial crime in crypto. So bottom line, after our myth debunking, hopefully you all agree with me that those are 3 myths now. With enough education and information, you can cut through the noise and really see what's out there.